Yes, welcome everybody to this new edition of Reporting on Economic Issues again. My name is Eloise du Plessis, and today I am joined by Eloise du Plessis. She's the head of research at PSG Namibia, and today we're going to unpack the issue of the economic outlook, Namibia's economic outlook. From the figures around the region, we have seen that all economies are not doing quite as they're supposed to do. Firstly, because of COVID-19, or mostly because of COVID-19. And today I've invited, I think Eloise, you are the best to do the job on this one, to just kind of take us through what we should expect on the Namibian economy. So I think the Bank of Namibia put out a statement early April or late April, if I'm not mistaken, that they expect the Namibian economy to contract around about 6.9%. And PSG also put out a similar outlook, but more of a bigger contraction of 7.8%. So I think, Eloise, let me give you the chance to first of all just explain why it is important for us to have an outlook, why should we bother reading about the outlook, and why the outlook?
Yes. Hi to everyone who's watching this today. I think that it's important to have an idea of what we're expecting of the economy, not because we think we're going to be, in quotation marks, right. Because it's very tempting to say, oh well, I got that forecast right, or I got that prediction right. The moment you're putting a decimal point on something, you're already saying, I'm actually just making this number up. But we need to know what we're expecting, especially for planning purposes. We have businesses around the country who need to think ahead, who need to decide, do I need to take out an extra loan from the bank? Do I need to, can I expand? And sometimes it's good to know what is the expectation. Do we expect it to be worse? Do we expect it to be better? Where are the pockets of growth that could be positive? So the number that we are giving, the minus 7.8 number, please don't keep me to that. It's not that I'm saying that is exactly what the number is going to come out as, but it's just a very good indication of saying, this is how much we expect the economy to suffer in 2020.
Okay, great. I picked up a couple of things there. So you're asking us to think ahead.
That's it.
Basically. So I think I'm going to give over to you. So you just give us a rundown of what these pointers are, what these indicators. I think we are also going to focus maybe on with a little bit of history on how certain sectors have been doing, and then that I think has informed in a way what you're predicting to be, and also just relevant news that is coming, consider about the certain sector, government, the rollout of COVID effect, the opening up of borders soon, and all of those things. So let me give over to you and just help us understand this whole economic dilemma.
Okay, excellent. Well, let's see if this is working. We did our quarterly economic update in June. So if I try to update the numbers, but a few of them are still from the first quarter of this year, because that's the last economic report that we have. So if we just look at overall what's going on, we forecast that there will be a contraction of 7.8% in 2020. The Q1 GDP figures confirmed that the Namibian economy is really struggling. GDP declined by 0.8%, and in Q2, we all know what happened in Q2, right? Quarter two was April, May, and June, and those were not nice times for anyone in the world, quite frankly. But for Namibia specifically, that's the time we went into lockdown. So, when the Q2 figures come out, we must just brace ourselves. And that's what's also very important. Every time that economic figures come out, always remember, this is history. That's already happened, right? That's got nothing to do with what is because the Q2 figures come out somewhere, in September. So, by September, we're already 3 months gone. So that the number we're getting is an old one. Just always keep that in mind.
Yeah.
We're specifically in the first half of the year, we had the budget. So I'm going to chat a bit about that, and then one of the big COVID responses around the world, but in Namibia also specifically, is that interest rates were dropped to very, very low levels by the Bank of Namibia. So on the 17th of June, we were at 4%. So people can borrow at much lower rates at this stage. The question just is, how many people are able to borrow at this stage? So the banks still need to look at affordability. The banks still need to look at whether you can actually repay this loan. So if you have debt, for example, if you bought a car on debt, if you have a home loan, anything like that, the reduction in that repo rate definitely reduced your monthly payment. So you have the same house, but you just pay a little bit less for it every month, which is supposed to put extra money in the pocket of the consumer, right? So that they can spend it and keep the economy going. But if you can't go out of your house, then there's no way to spend that money anyway. So we'll have a bit of a look at just what wholesale and retail trade has been doing. So like I said, we're expecting around negative 7.8% for 2020. This might change if when we get the Q2 numbers to see just how much of an effect the COVID crisis and response. I think one needs to also always see that there's a difference between the virus and the response to the virus. The virus is one thing, and that's human lives, and then there's the response to the virus of the lockdowns and the curbing of tourism and all of these things. So if we look at what was happening, the mining and quarrying in 2019 really suffered. And I'll show you that it recorded a decline of 11.1% in 2019, largely due to diamonds. Diamond production that's down, and uranium production that was down. Construction industry also suffered a lot in 2019. We've seen a little bit of a pickup, but 2019 was bad for construction overall. And then wholesale and retail trade just keeps going down. And we'll see just how big a part of the economy wholesale and retail trade is. Some of the bright spots that we had in 2019 was agriculture and forestry, which didn't contract as much as it did. But financial services remain the one sector that keeps going. Our banking industry, insurance industry is very strong, and we can now be upset about that, or we can say, thank goodness we have a strong financial system that underpins all of the economy. So that is a very big positive. Just looking on to our current account balance and the inflation rate. Inflation has plummeted, and the main reason is that the consumer in Namibia is under extreme pressure. So the shops cannot pass through inflation to the consumer. Obviously, the low oil prices that we've had, in the last few months, also brought down inflation quite a bit, because that brings the cost of transport down, and transport has an effect on all of the other pieces of the inflation puzzle. The other big thing to remember about our inflation rate is that around 33% of that inflation number is made up of housing inflation. And housing inflation is only worked out on rental inflation. So so there's no house prices in the rent in the housing number. It's only rental. And we've seen that, and that number only gets updated once a year in January. So we saw that in January, the rental inflation was actually negative. Okay, so the rents have begun being cheaper. We didn't need rent control. Free market sorted out our rental problem. So and that number that's so low and such a big part of the inflation number actually anchors that number for the entire year, right? So only in January next year will we have a new rental inflation number, and that might be higher or lower, but that keeps the inflation number down for a large part of the year.
I didn't know that.
Which is one positive. Not for the landlords, don't like it, but at least our rent not going up that much. Then our current account balance. Now, what is the current account? The current account is the difference between how much you're importing and how much you're exporting. Okay. Now, if you look at here in 2016, we had a very big current account deficit, which means we were importing a lot more things than we were exporting, right? And that sounds like a bad situation to be in, because if you want to, especially if you want to earn foreign currency, you need to be exporting a lot. So now it looks like, but wait, look at this. It's improved so much, you know. We're now at 2.3%. The problem with this current account balance that's improved this much is because the Namibian economy is under such pressure. So that means that we're not buying things, right? We don't have money to buy more cars. We don't have money to buy TVs and all of these appliances. So that's why our imports have become lower. It's not because we've had this massive boom in exports. It's because we just haven't been importing as much anymore because we don't have any money to buy these imports. Then if we just go on, I have a short piece here just on our economic and political risk, just in terms of where Namibia ranks. Our growth is notably weaker than our peers. We perform worse in several of the economic performance indicators over 2019 and with the projections to 2021. We're underachiever at this stage in terms of our GDP growth. Now we'll see how this actually plays out as COVID plays out. So to see what is happening in South Africa, what's happening in Angola, Botswana, all these countries that we consider to be our peers, what will the effect on them be as well? So this might be a bit old. So let's keep watch on this to see if Namibia does better or worse than our peers coming in the next few months.
I think our hope is to improve.
Yes, hopefully. One thing that's not improved is our credit rating. We've seen that Moody's and Fitch now have us on a negative economic outlook. And it's mostly because of the economic prospects, right? So there's not much light in terms of where economic growth is going to come from. We see specific challenge for the government in terms of their debt. That's risen to very, very high levels. We don't think that there will be any positive rating action from Fitch or Moody's in the coming 12 months. And the risks to our rating is skewed to the downside. The things that hamper us, that are our challenges, is our fiscal consolidation. Now, what does fiscal consolidation mean? All that is our government's expenses and income. So how much tax are we getting in and what are we spending it on? And if we keep spending more than we're getting in tax, then that is a problem. So fiscal consolidation just means, like, if you as an individual look at your finances and you see, I am spending more each month than my salary, and I've got all this Foschini and Edgar's and Truworth Scott's, and I have a furniture that I buy on credit, and all of these things. I want to look at all my debt, and I want to make my debt as small as possible, so that I can control my spending better. That's exactly what we expect the government to do as well, right? We want to say, okay, your debt is really high. You're paying a lot of money for that, every single year, just to pay interest on these loans. So we need to rein in spending, increase the income. How do we increase government income? Businesses need to do better. If businesses do better, they pay more tax. If more people have jobs, they pay more tax. So that's the way that we improve this, is to make sure that the business sector is flourishing and that people have jobs, because then we can increase our revenue to sort out this debt problem. We still have a very large high unemployment figures. We have skill shortages. All of these things remain a problem, and we need to look at how we can address it. So in terms of our economic structure, let's just sometimes it's interesting to just have a look at what is contributing to our economy, right? If you look here, agriculture and forestry is only around 3.4% of our total economy, but it employs the most people. If you look at mining at this stage is around 10%, but the big hitters are wholesale and retail trade, and then your public administration, which is not the best situation to be in, to have your government be such a big part of your GDP. That's something that one would ideally like to change. But wholesale and retail trade also still a very, very large part of our economy. So 2/3 of the Namibian population is dependent on agriculture for their livelihood, and it's 1/5 of the country's employment if you combine the agriculture, forestry, and fishing sectors. So we need to remember that when we have droughts, that's why it has such a detrimental effect on our economy, because agriculture employs so many people. The rich mining industry doesn't employ a lot of people, but it brings in a lot of revenue. And our industrial sector is dominated by diamond and uranium mining. And then we have our manufacturing, which I will get to a bit later to just show you. So our services is still the biggest part of the economy, at around, at this stage, 65%. Just looking at where do we get our power from, because we've recently heard that our energy sector is to be liberalized, because we opened up the sector with the new policy, the modified single buyer market model. So this allows large consumers to buy up to 30% of their electricity from independent power producers. Previously, the IPPs could only sell to NamPower, and now this new model encourages competition and private investment in Namibia's energy sector, which is a very, very positive development. So we're keeping our eye on this.
Sorry, Eloise, just to stop you there. I think one might want to say, this is a discussion we had a couple of days ago with a couple of friends, just in an informal setting. And they asked, this new policy was introduced, should we now expect electricity to be cheaper, or
will it be cheaper than other power?
Yeah.
Yes. There's been, in the last just 10 years, the price of sustainable power generation has come down significantly. So I think that these projects are expected to compete very favorably with the power sources that we have. NamPower will also develop 150 megawatt with 4 projects: the Umburu solar PV, the Luderitz wind power, the Ochikoto biomass, and then the Anigas power station. and the IPPs will develop around 70 megawatt on a competitive procurement basis. So the fact that you have that competition should actually help to keep the price down as well. So let's see how it plays out. Let's see. Then just in terms of what happened in the first quarter, the decline of 0.8%, that's before COVID, right? So looking at this, the agriculture and forestry industry was the worst performer, with 13% declines in that first quarter. It has to do with the successive droughts, which have just decimated our livestock populations. The livestock farming sub-industry declined by 22%. If we look at it in the first quarter. The second worst performing industry was manufacturing. Declines in meat processing, diamond processing, and the non-metallic mineral products. And then transport and storage, also down 7%. Hotels and restaurants was already down 4% in the first quarter. So we will just expect that to now be even worse. On the other hand, sorry?
I'm saying for the tourism sector, I'm saying the expectations are like it will be way worse now, factoring in COVID.
Yes, exactly. I'm chatting about that in a different slide. It's not looking good. There was a strong performance for construction, as well as solid growth in cement production. We always need to look at what base it comes from. So I have a chart to show just how we should be looking at that. This is a chart that I started doing when we started seeing all these declines in economic growth. And I said, okay, now we've had a minus 15%, minus 3%, then we get a positive 2%. And I wanted to be able to see, not in growth terms, but in actual output terms, what does this mean? So let's look at this graph. So these bars is our total rolling 12-month GDP, okay? So if we look at the end of 2013, okay, we, as a Namibian economy, did about 130 billion Namibian dollars, okay? That was in 2013. Then from 2013 to 2015, we had an excellent growth, right? And we added around 15 billion to the economy in those 2 years. So we ended at around 146 billion Namibian dollars. But what has happened since then? If we look at where we were in the first quarter of 2016, our economy was at 146 billion Namibian dollars. It is now at 143 billion Namibian dollars. This is now 4 years later. So at 4 years later, we're 3 billion Namibian dollars lower than we were in 2016. And most of it can be seen in the wholesale and retail trade. So we were at the peak of the wholesale and retail trade. This is this blue line. Do you see this blue line that I have here? That just shows you that at our peak, the wholesale and retail trade sector did about 16.6 billion. And that is now, and that's before COVID, we're at 13.8 billion. So there you can see the 3 billion that's gone.
It's gone.
It doesn't matter that the mining industry, if you look here, our mining industry increased a lot. And now we've seen the downturn again. And the manufacturing industry as well has actually done pretty well. The wholesale and retail trade that's reduced as much as it has, which is it's normal people not being able to buy the stuff that they were buying, everything that you can think of, whether it's cars or appliances or anything like that has just reduced by that much. So I like to look at this picture to see where we're actually at, right? Because the percentages eventually doesn't mean anything anymore. So this is just our agriculture. If you look that the cattle and small livestock farming contribute nearly a third of all the activity in the agriculture sector. And cattle accounts for 30% of the total units marketed, while the remainder of the small stock, sheep and goat and poultry, making very small contributions. So the average monthly total of livestock marketed declined from, in 2018, around 115,000 average monthly to 90,000 in 2019, which has just been the effect of some of it is regulation, but some of it, most of it is due to the drought as well. Cereal production has reduced quite a bit as well, as you can see, from 2018 to 2019. We're expecting cereal production to recover in 2020 because we've had good rain, and this is the fishing production. So increase in our fishing production as well. The main export market for our Namibian fish is Spain and South Africa, and in 2019 the fishing sector actually grew by 6.1%.
Strong, yeah.
Now, in terms of our mining, 42% of our mining output is diamond mining, and we'll see why that is a problem. As you can see here, how the export growth has declined for diamonds and for all the other minerals. So minerals, it's actually been negative, and for diamond mining as well. So we've exported less of these minerals in 2019. Manufacturing. So manufacturing contributes around 14% in 2019, and it's focused on the food, beverages, and fishing industries. So you can think of the things that are being made in Namibia. Food processing is mostly like Namib mills. Beverages is mostly Namibia breweries, and we know all the names. So the manufacturing sector increased by 3.5% in 2019, and you can see it here on my manufacturing graph. I did, exactly that same graph that I showed previously. I did the same for manufacturing. So manufacturing from 2014 to 2020 has increased around 2 billion Namibian dollars. It's improved performance in beverages and then meat processing. But we've seen that in the last few quarters that manufacturing has declined as well. Then just our construction industry. Now here is where this graph actually makes a lot of sense, because if you look at this construction industry growth chart, you see that it decreased in 2016, 2019, and then I tell you, oh, there's been a 19% increase, and you think, oh, great, our construction industry is back, everything's good. But here on this graph, you can see just exactly where our construction industry is now in comparison to where it was. Okay. Now, what's very important to note is this increase from 2013 to 2015, when our construction industry was around 8 billion Namibian dollars in 12 months, was the building of the mines. So Husap mine, all of those mines being built contributed to this construction. And then when those mines were built, that construction fell off. And now this increase here that you're seeing here now, after it fell down, right? So the industry went from 8 billion a year to 3 billion a year, right? So 5 billion gone from the construction industry. And we're now seeing the pickup here with new buildings being completed. So just to see what that means. So for services, like we've been chatting about the wholesale and retail trade that's declined as much. This is the composition of the services. So you can see wholesale and retail trade is around 16% of that. Hotels and restaurants, 3.6% of that services sector. And then your financial intermediation, obviously a very big part of that as well. But there's always this elephant in the room of public administration sitting there, which is government services. And ideally, we would like government to be a smaller part of our economy. And here is the tourism expectation that we have for 2020. We expect about 12,000 tourism job losses, and that the tourism sector's contribution to GDP and its contribution to employment will decrease significantly. So it was at around, between 5 and 5.5% in 2019, and we're expecting that to fall down quite significantly going forward, or at least for 2020, and then hoping that there will be a resurgence as the world opens up again. And then just on our household debt to disposable income, we've seen that Namibians have taken on more and more and more debt. So there's their credit to disposable income at this stage is around 78.7%, and it's driven by the demand for short-term credit. So because people are struggling economically, they're taking out loans, and we forecast a further deterioration because of all the things happening in the economy, and this obviously is a risk to the banking sector, because if people can't pay their houses, then that increases the non-performing loans of the banks, and we'll have to see how the banks deal with that. It might not be in their interest to put all the properties that are in arrears on the market at once, because who's going to buy it? So it's going to be interesting to see how the banks deal with people struggling to pay mortgages. And we're waiting for their results now at the end of June, and we'll see.
Sorry, let me just stop you there. I think in South Africa, I read an article, I think early this month, by Bloomberg, and they were saying the expectation is that, I think, non-performing loans in South Africa is going to be around about 10%, and that was, in my view, that was going to be very huge. If you look at the balance sheet of the banks in South Africa, and that 10%, I think, is around about 100 billion. Now, Namibia, they have already been increasing as well before COVID. I'm just thinking, after COVID, I don't even know. It's going to be a very big figure there as well.
Yeah. Yes, I think we do need to be a bit circumspect about the numbers that we are hearing, because there might be a situation where the banks, because remember, they need to make forecasts. Do you remember how we talked about forecasts at the beginning?
Yeah.
And we said that it doesn't matter. You're only going to be wrong. There's nothing else. If you say what's going to happen in the future, you're going to be wrong.
Yeah.
So they try to predict, how bad it will be, and it might be in their interest to choose the worst case scenario, right?
Yeah.
And make provision for a lot of bad debts. So when we see their numbers come in, we see a big number.
Yeah.
But that might not be exactly what happens, right? So the guy who's on the edge, right? Where previously they would have said, no, we think he's going to be fine. They say, no. Anyone who's on the edge, we're chucking in the NPL pile, right? So the number might look worse, and then as this plays out, you can see a bunch of recoveries.
Yeah.
That is one scenario. The other scenario is, we try to keep our figures as close to what's actually happening now as possible. And, in 3 months, maybe you haven't lost your house, but in 6 months, you will lose your house. So, and then it might be worse. The numbers that I've seen, and the problem is there's such a disparity between the South African banks. Capitec, for example, has a much higher NPL ratio because they've got unsecured loans, right? So they might be very high, but the other banks are between 5 and 7% around NPL numbers, forecasted numbers that I've seen at this stage. But I do think we need to keep in mind that the banks are going to put a bunch of provision through. We saw with Discovery's numbers that came out, they've put in claims up to 2022 in this year's number, right? So now it looks like Discovery's earnings is very, very low, but they've put in losses up to 2 years in the future. They've put into this number, so they might show a recovery. So we must just look at these numbers and ask of the banks, what is this a worst case scenario? Is this actually what you're seeing now? What is your provisioning looking like at this time?
Okay, great.
Then just on some of the other economic fundamentals, I don't think I want to say too much about this. Our ranking doing business, it looks like we've done better, but it's just because the rest have done worse. So it's not like we've really improved our score. Our big problems remain starting a business. We're almost one of the worst in the world. We're in the bottom 10 in the world on how difficult it is to start a business in Namibia and registering property. So if we can improve, and both of these things are administrative, bureaucratic things that should be able to be fixed. And if we can do this, if we can sort this out, we're already going to make a lot of headway in improving the business environment. I've already chatted about the current account, just looking at what are our exports. Our mineral products, so I think this would include uranium is the biggest, and then diamonds on its own is 16.7%. Then around 6% is food and live animals, and 18% is fish that we're exporting, and other manufactured goods that's in there. I suspect there's some beverages in there as well. Is around 24%. Then our capital account, we forecast more FDI outflows in 2020. In Q4, our FDI stock was mainly in the mining sectors and in financial services. So this will impact our foreign exchange reserve as well, as our exports and our investment inflows slump due to COVID-19. And then we expect a small recovery in 2020. Then just looking at our bond market, anyone who's studying finance will find this very interesting in terms of what a steepening yield curve in real time looks like. So if you look at this blue curve, this was our yield curve in 20 November 2019. So what is a yield curve? The yield curve is what is the interest that the government is paying on its debt in different time frames. So this bond from the government expires in 2050, right? So they need to repay this bond in 2050. And they paid around 10%, around 11% in November last year. They're now paying 13% on that bond, right? So on the long end, on the long bonds, the far into the future bonds, the interest rates are very high. But then if you look at the short end, right? If we're borrowing in the short term, these rates have come down a lot. So where the T-bill rates was around 8% in November, they're trading, some of them are trading at around 3% now. So 4% here is what you're getting on a treasury bill right now. So this means in the short term, it's very cheap for the government to borrow.
Yeah.
So that's also where their debt is concentrated. The government's debt sits mostly in this short end and not on the long end, because why would you pay 13% for the next 30 years if you can borrow for a year at 4%?
4%, yeah.
Right?
Yeah.
So this is just how these yields have changed on the bonds. On the Eurobond, this is not good news. In March, the Eurobond yields just spiked out. It's recovered a little bit, but this just means that if we want to roll our Eurobonds, so if we want to take out more Eurobonds to pay off the ones we previously took out, the one that expires in 2021, we are going to have to pay up for that funding. Then I've just quickly mentioned the budget. Really just a spiking out of debt in the budget. Our budget deficit projected to be 12.5%, which is the biggest it's ever been. We're basically just keeping our spending the same while our revenue is plummeting. That's basically what it's coming down to, and that means we need to borrow money for it. And then just on the mining, here is how you can see what the effect is on our diamond mining. You can see how diamond prices have just really decreased from 2015 to now, and how the production as well. If you look at the from 2018 to 2019, in all these countries, right, where De Beers is, in Canada, South Africa, Namibia, and Botswana, there's just been a decrease in the production, which puts a lot of pressure which puts a lot of pressure, obviously, on our mining industry. Yeah. And that is my story.
Thank you so much, Eloise. Very, very concise, as well as very detailed as well. But yeah, I think a couple of very key takeaways from what you've just told us here is that there was somewhat, I think from my end, what I'm concluding is there was somewhat an improvement that started off at the beginning of the year, but we are slowly seeing that is going to be washed away entirely by the whole COVID effect. So that's one. And also, I think if we can concentrate more on improving issues around, say, business registration and fixing out issues on property registration, I think we can expect an improvement of business confidence and people trying to buy properties and start businesses, and then the whole economy starts to run again. So yeah, those are some of the very, very important ones. You mentioned a very interesting figure of the high number of people that are employed in agriculture, and I think it's also a very important sector that we need to grow and really take care of. I was doing a review of Wandile. I don't know if you know Wandile Siklobo. He wrote a book on agricultural stuff. So yeah, I was doing a review on
I haven't read the book. I should get it.
Yeah, you should get it. It's a very good book. I was doing a review on it this week, and I think it comes at the point where we can't any longer, for example, for Namibia, we can't keep on looking outside anymore. We really need to develop ourselves within and then grow from there. So those are mainly, without just deviating or going through again what you just said, these are the main key things that you've laid out here. And I think also, just to stay on that point, that 7.8% is not the final figure. As things come in, as information comes in, that can always be changed as well. So I think any last points from your end, maybe, that you want to put more emphasis on and just drive the whole point down?
Yeah, no, I just think that the problem with the COVID in Namibia was that we were already suffering a lot before this crisis hit, right? Mm-hmm. So even businesses who had reserves in 2018 still, right? 2018 and 2019 were not fun years.
Yeah.
So now you get to the beginning of 2020 and you need to deal with the crisis as well. So the Namibian economy was already hurting, and this really just gave another gut punch. And I do think that it's important that we liberalize our regulations for business, so that business can operate freely and get us out of this, because the government cannot borrow any more money. And we need to get out of the trap of being reliant on government spending.
Yeah.
So I hope that the private sector can take the reins and actually run with this, and that there are good changes in policy that will encourage business.
Yeah,
I think that's it.
Should we expect any publication anytime soon? Maybe any outlook towards the end?
We will do another one in September. I don't know if they. I hope that the Q2 numbers will be available for that one. That's going to be very interesting to see what the Q2 numbers show us.
Yeah.
But also coming up will be all our companies on the NSX that are reporting. So we saw that roller coaster last week.
Yeah. Talk about that, please.
Okay, let's talk a bit about that.
Yeah.
We need to distinguish between the different stocks, right?
Yeah.
There was a large decrease in FNB, CGP, which is Capricorn, which is Bank Windhoek, and then Namibia Breweries. Right. So Namibia Breweries was a large trade. Okay, it was a big amount of shares. I think it was around 80 million or something like that traded.
Yeah.
And it traded down from 34 Namibian dollars down to 26. Okay, in one day.
Yeah.
The next day,
it
traded at 34 again. So that was a blip, right? But remember, Nambrus was trading at 48 Namibian dollars a few months back. So it's been a downward trend for a while. But remember, on the Namibian Stock Exchange, it's so illiquid. There are so few trades that a very small trade of, say, 1,000 Namibian dollars does exactly the same thing to the price as a trade of 80 million Namibian dollars.
Yeah.
So that and that's what's been happening with CGP. So the fall in the Capricorn price has been driven by very small trades. And what we see there is those are people who bought the shares at 8 Namibian dollars and 75 cents at the IPO, right?
Yeah.
They've received dividends every 6 months up to now. Now it's someone who's in a situation where they need the cash. They need to pay their mortgage. They need to cover some debt somewhere. And they're saying, listen, I sit with these CGP shares. I bought them at 8. If I sell them now at 11, even though the previous price was 13, I'm happy. Give me my 11 Namibian dollars for the share. I go. And so it's a small trade of, say, I don't know, 100,000 Namibian dollars, but it makes the price fall quite a bit.
Yeah.
So FNB was also actually a big trade on the FNB one. So the FNB price has suffered quite a bit. There's quite a combination in the FNB price between big institutional investors and smaller retail trade. But so the prices have already bounced back a little from that, Black Thursday that we had. So the Nambrus price was back to where it was the previous day. It's at 34.50. CGP has kept on trading it was down to 10.50. It went up to 11. FNB has also, from 20 up to 23. but it can be a small trade.
Yeah.
You know,
Yeah.
guy sells 2 shares, I don't know, 50 shares, and the price changes. That is what you need to know if you're investing in the Namibian market. It's very illiquid. It's going to be fun, right?
Yeah.
It it might not be good for your heart, but
Unfortunately, yeah.
it's going to be volatile. Yes.
Yeah. Yeah, I think that wraps the whole webinar for today. Eloise will definitely call you back again to explain some other economic issue again. Thank you for
Excellent.
being available to help our readers and the Namibian nation at large to break down all these smaller bits and pieces. And then again, I think we should go back again to look at the figures and start looking ahead of what's coming.
That's it. Let's see what Q2 really was like.
Yes, definitely. Eloise, thank you for taking out the time and have a wonderful day.
Same to you. Thank you, Lazarus.
All right, Eloise.
Bye.
Bye bye. Yes, and that was Eloise, PSG of Namibia, bringing us that exclusive or just in-depth analysis of the June 2020, sorry, economic outlook from their end. And keep watching, subscribe to the Namibian YouTube channel.